Hey guys, Bill Soriano here from Pittsburgh. It is about 2 p.m. on what is today? Thursday, July 30th. One more day left in this month. Summer's almost gone here, guys, but we still have at least a whole nother month. So that's good. Anyway, another trend trap trading video for you guys. I've been making these. I've been pumping them out here. Sometimes one a day, sometimes two a day, at least 3 or 4 a week here. But I've been pumping them out here lately because very excited about this strategy, guys. And you know, this is our educational platform here. This is our educator that teaches this Trend Trap Pro strategy, Jay Awal. And I got to tell you guys, this is where it's at. You want to get my link. Join our educational platform here. You get access to way more than just Jay and his training. There's other educators on here. There's other products and services on our educational platform as well. But to get access to Jay Awal's Trend Trap Pro Boot Camp and his live sessions, you have to become a member of our platform here. So you join, you get access to all of the live sessions here. You see there's 2 live sessions coming up. Jay goes live 5 days a week, Monday through Friday. There's one coming up tonight, 7 p.m. Eastern time, and then one tomorrow at 8 a.m. Eastern time. And then you have all the recorded sessions right here. The newest ones first, but all of the recordings are in here, right? Then you get access to the boot camp, the Trend Trap Boot Camp, right? This is 5 videos here. Lesson one goes over the trend. It also identifies the daily highs and the daily lows. But this is the most important part here of the strategy, which is the trend. And then video two goes over the zone, video three, the breakout, video four, your risk management, and video five is putting it all together. But it's a 5-step strategy. Step one is identifying the daily highs and lows, the daily high and low range. Step two is identifying the trend. Step two, guys, is the most important part. Step two is actually video one here, but this is the most important part. Step three is identifying the zones. Step four is then the breakout. That's the trading confirmations. And then step five is going to our quantum scanner. That's the only time we even pull a scanner up. You get access to 9 different scanners on our platform. We use the quantum scanner just for a second confirmation before we take a trade. And that's the only time we use any scanner. We don't use it to find trades. We just use it as the final confirmation after we've got an activation on our charts in step four. We use it as a final confirmation. No indicators, and the scanner is only used very briefly as a final confirmation. But the trend is the most important thing, and that's why I want to make this video for you today. I want to talk about the trend, okay? But uh, I'm only going to give you an overview. I'm not going to teach you the strategy. If I do, Jay will throw me out of the group. He already told me, right? He said, I'm going to come looking for you. I'll find you. Okay, I could show you. He mentioned it on the live session 2 days ago. But I can't give you the whole strategy. You have to join the platform to get that. You try it out for 7 days. If you don't like it, you can get your money back from the company as long as you request it within that 7-day window. If you get on and you watch this boot camp, guys, and you get on the live sessions, you're not going to cancel. I can guarantee you that. Now, the boot camp gives you about 80% of the strategy, but you get that final 20%. You get those nuggets on the live sessions with Jay. And again, if you can't make them live, that's okay. They're all recorded. So at some point, you either have to get on the lives or watch the recordings of the lives to get those nuggets, right? To get those nuggets from Jay. But anyway, the trend is the most important thing here, guys, because that if you're going the wrong way, you're going to lose a large percentage of your trades. You're not going to be profitable, right? So we're taking with Trend Trap, we're taking risk to rewards on trades of 1 to 2, 1 to 3, 1 to 4, and up. So with that type of risk management, you have to go with the trend. If you're going for that type of risk management trade, and you're not trading with the trend, you're trading against it and you don't know it, you're going to lose a large percentage of your trades. There's just no way, and you're not going to be profitable. Now, if you're scalping in the market and you're risking like, uh, 10 or 20 pips to get 5 pips, well, yeah, you'll be okay, but you're going to have to win 2 out of 3 trades just to break even, right? With our risk to reward, we can lose, um, 2 out of 3 trades and still break even, right? Where you have to win 2 out of 3 with the scalping method, you have to win 2 out of 3 to break even. We can lose 2 out of 3 and break even. Now, full disclosure, because I've made videos on this before, uh, you know, chastising educators and trainers and traders for not saying this. You won't actually break even because there are fees involved, right? You do have to pay fees to enter and exit trades. With my broker, I have to pay like 20, maybe 25 cents, a lot, right? In and out. You also have some slippage sometimes. And if you're going to hold trades through the end of day, right, you're going to have to pay swaps, which is interest. And if you hold those trades on Wednesday, like I did last night, you're going to pay triple swap fees on Wednesday if you hold trades over. Okay, but that's just, for all intents and purposes, we say that if you lose 2 out of 3 with a 1 to 2 risk to reward, you will break even, but you actually won't break even. You'll lose a small amount of money because of the fees and the swaps. Um, anyway, though, you have to trade with the trend. It's so important. That's why the strategy is called trend trap. That's the first word in the strategy, trend. So trend trap. The next important part is trapping it in the zone, and that's done on the 1 hour time frame. But to identify the trend, we use the 4 hour time frame with trend trap. And I guess we use the 4 hour because the 1 hour, in my opinion, would give you signals to change the trend too early, right? And the daily just takes way too long. You know, the daily just takes too long to give you a confirmation the trend has changed. So you could get stuck in 1 or 2 bad trades because it's just taking too long to give you confirmation. 4 hour time frame is best for this. Now, first of all, I want to show you, I am in a trade right now in EURUSD, and EURUSD just switched from bearish to bullish. Okay, show you that in a minute. But if you didn't know that, if you couldn't look at the 4 hour chart and say, oh, this isn't bearish anymore, this is bullish, then you would still be trying to short this because we were shorting it prior to today. It was bearish. Today, when I checked the charts, it was bullish. So I'm in a long here, as you could see, and I'm probably going to have to hold this through the rollover period again. And I did make a video here. Where is my, made a video here, end of day trading tips, right? End of day trading tips. What to do if you're going to hold your trade through the end of day, if you're trading on the lower time frame, 1 minute, 5 minute, 15 minute. If you're on the higher time frames, it generally doesn't matter, right? Because your stop loss is enough pips away to not get caught by the noise of the spread opening up at the end of the day. But I tell you what to do here. If you're going to hold trades over the end of day, make sure you watch this video first before you do it. Okay. Very important. Very important. It's on my channel here. And again, guys, you're watching this video. If you like it, subscribe to the channel, like the video, put a comment down below. YouTube for some reason doesn't want to show my videos to too many people. I have over almost 900 subscribers, but they just don't want to show my videos for some reason recently, and I don't know why. And but I make the videos. I like making the videos because I like sharing with you what I've learned from our educational platform and our educators when it's worthwhile to learn, and this is worthwhile to learn. And I also like to teach it because by teaching it, it helps me learn it better. Okay, it helps me to learn it better when I share it. Okay, I may not be the best, but as I keep doing it, I get a little better each time I make a video. But anyway, they don't want to show my videos. So hey, if you like the video, if you get some value of it, put it on your social media, share the link, maybe share it or share it with a friend, whatever. But only if you get value from it. If you don't like them, doesn't help you at all, just get rid of it and go on to something else. I don't care. I understand. But anyway, we're in this trade here. We'll probably have to hold it over. Now, to show you this trend, I want to show you the DXY. So this is the dollar index, okay? And this is something that we look at with Trend Trap. We don't trade it, but it's important to look at it because it gives us a lot of information. For instance, if we go to the 4-hour time frame, earlier this week, the dollar was bullish. You could see here on the 4-hour time frame, we have this higher high right here. Okay. And that was a higher high. That was our higher high with the way that we identify break of structure using Trend Trap. Now, we identify break of structure much differently than any other educator or most traders out there, I would imagine. We have a different way to identify structure. So that's why we're able to find out when the trend has changed quickly because of our different way of doing it. But we don't get stuck in those false breakouts that make it look like it's changed, but it actually hasn't. Okay. And so that's important. And there was something else I wanted to say about that, but it slipped my mind as I kept talking. Anyway, this was bullish on Tuesday. This was a higher high here. And so if this was the higher high, that means this was the lower low. So this was our point where a break of structure would cause the trend to change bearish. Now, everyone else calls that a choke or a change of character. I don't know. We don't use that term in Trend Trap. We just say break of structure because that's what it is anyway. And in previous videos, I may have said that we use internal as well as external structure on the 4-hour time frame to determine breaks of structure. And that was kind of incorrect. I really didn't fully understand what goes into identifying a break of structure and all of that, and identifying the structure on the 4-hour time frame using Trend Trap. Didn't fully understand it. So it may look sometimes like we're using internal structure, but we're really not. We're really not. So here, if this is the higher high, then that means this is the higher low right here. This is the move that caused this higher high to form. Okay, this is it right here. And so once this candle closed down here, most people would say, oh, that's a break of structure. We're bearish. We're bearish now on the dollar, right? And that's fine, but we don't consider that. We look for a little bit more. So anyway, the next candle, the next 4-hour candle there, we kind of get what we're looking for. And so at that point, which is Wednesday, close of market on Wednesday, we've now considered that the dollar is bearish. So a couple things to keep in mind. If the dollar is bearish, you have to understand what effect is that going to have on the pairs that you're trading, right? So if you're looking at gold and silver, right, anytime the dollar is weak or bearish, gold and silver normally go up. Now, there are some exceptions, okay? Sometimes there's economic conditions going on behind the scenes, things going on we don't know about, and that could not be the case. But in most cases, if the dollar is dropping, if the dollar index is dropping, gold and silver is going up. So we've been bearish on gold and silver, and we still are at this point, okay? But I've taken a couple trades in gold the last couple days, and I couldn't make any money on them. They basically made a little bit of a move. They got to my break-even point, and I moved my stop loss to break even when it got there. And so I didn't lose any money, but I couldn't make any money. And the reason is because this dollar index fund will usually give us a signal ahead of everything else. Okay? So everything else usually takes maybe another day, sometimes a half a day. Sometimes they happen simultaneously, but normally there's a little bit of time. So when the dollar turns bearish there on Wednesday, it's saying, hey, you might not want to take any more shorts in gold and silver, because if I'm bearish, gold and silver is probably going to go up. So if I continue down, right, gold and silver is going to go up. And not only that, if I continue down, pairs like USD CHF and USD JPY are going to drop as well. And they have, right? They have. In addition to that, pairs like EURUSD and GBPUSD are going to go up. Okay. So you have to keep that in mind when you're taking your trades, and you have to look at the dollar index fund first because you want to know what that is. Is that bearish? Is it bullish? Because that's going to help you determine whether or not you should take a trade when you get an activation, right? Now, we tend to take all trades if they activate, right? Because we have a 5-step process that we have to go through in order to get that activation. So we tend to take them no matter what. But if you're going like counterintuitive to the dollar index, you may just want to take a little bit less risk. So if you're normally risking 0.5% of your account, maybe you just risk 1/4. And you may also want to get out faster. Instead of going for your normal 1 to 2, you may just want to get out at a 1 to 1.5. But if I would have did that the last 2 trades, I would have made some money instead of breaking even. But I didn't. I was stubborn. I thought that the dollar was going to rally. In fact, I made a video showing that the other night, but it didn't. The dollar says, no, I'm just going to keep going down. Okay. So again, the dollar is going down. The dollar is bearish. Now, of course, it's going to rally at times. You see here, it rallied a little bit here, but then that's just a pullback. I'm sorry, it's not a rally. I consider it a pullback. A rally is when it makes a move, right? A big move. So this is just a pullback in a downtrend, and then it continued down, right? You could see the last 3 candles on the 4-hour time frame have been bearish. So when we look at EURUSD on the 4-hour, right? We were bearish on this because we had a lower low right here. Okay, so we had been bearish, right? This was our lower low. So if this was our lower low, okay, we determined that this was our lower high. Okay, this wasn't our lower high here. This was our lower high because we didn't get a lower low here. Okay, now price did go lower, but according to our trend trap rules, we did not get a lower low. So we did not have a break of structure to the downside here. Had that happened, then this would have been our higher low. But that didn't happen. So since that didn't happen there, this is our higher low right here. Okay. And this candle right here comes up, right? Crosses over it, right? Closes above it. But again, we don't consider that a break of structure yet. And then the next 3 candles are red. So we don't consider that break of structure either. So we actually don't get an actual confirmation that we're bullish in this until a day later, Thursday at 5 p.m. Eastern time. So remember, the dollar index told us Wednesday at market close, New York session close, but we don't find out here for a whole day later. Okay. So now we are bullish, right? We're bullish on EURUSD, and that is why we took the trade today, long position on the 15-minute time frame, right? Price broke up here above here. We located this zone here, support and resistance on the 1-hour time frame, right? On the 15-minute, we drew our trend line. We got an activation. We checked our GFU scanner, our quantum scanner. It activated on the scanner as well. So we took the trade. Okay. We took the trade. Now, remember I've told you in past videos, you see this line up here? This is our daily, I meant to mention this earlier. This is our daily range high and our daily range low. We determine that on the daily time frame. So this is a multi-time frame strategy. We determine the daily high, the daily range high, the daily range low on the daily. And there's a specific way we do that too, guys. It's not just like most traders, oh, just use yesterday's high. Yesterday's daily high and low. Go to the chart, look at the daily candle, mark up the high and the low of the candle body, and that's your high and your low range. Well, some people maybe use the week, the whole week, last week's candle, right? That's their high and low range. We have a different way to do it. And it's important because this daily range tells us we want to take most of our buys when we're in the bottom of this range, and we want to take most of our sells when we're in the top. That gives us more room to go. So we don't want to take a buy if we're right up against the top of the range. If we can't get our 1 to 2 risk to reward, we don't take the trade. Simple as that. And we don't want to take a sell when we're down here at the bottom of the range. So this is very important too. And it also gives us our target. So in this case here, guys, I need to get at least a 1 to 2 risk to reward. So I look at this and I say, okay, here's a 1 to 2 right here, but my daily high is all the way up here. So if I go all the way up to here, this is a 1 to 2.77. Well, I'm going to round it down to, I'm sorry, 2.77, 1 to 2.77. I'm going to round it down to a 1 to 2.5. So I'm going to try to get a 1 to 2.5 on this instead of a 1 to 2. Now, I don't take any trade unless I can get a 1 to 2 with this in mind. We also check 1 hour, 1 hour structure. We want to look on 1 hour chart, make sure that there's a 1 hour high that coincides with this, right? And there was over there to the left, right? So, and there normally will be if that's your daily range, right? That's your daily range high. Now we check this daily range high, every day after the market closes. Usually, sometime around 6 p.m. or 7 p.m. Eastern time, I pull up the charts. The first thing I do is I check the daily range high on each pair. I see if it changed, right? So if I get a daily close above or below the line, then I have to change the high or the low. If I don't get a daily close above or below it, I don't change it. Now, some structure may form inside of the range if it causes me to raise the low up, right? Or raise the high down, right? But it doesn't go any further away unless a high or low is made, right? And it has to be a close, right? Not just a wick, it has to close, okay? So that's kind of the first thing I do. Then the most important thing is I drop down to the 4 hour and I check the trend, right? You have to trade with the trend. After that, drop down to the 1 hour, identify my support and resistance zones, set my alerts, and then once those alerts get hit, we drop down to the 15. We look for the M or W in the zone, right? We draw the trend line. If we can't draw a trend line on the 15, we drop to the 5 to draw the trend line. If we drop to the 5 to draw a trend line, then we take the activation from the 5 as well. Usually I like to stay on the 15. I'll wait for an activation on the 15. And then the fifth and final step is to check the G-Fleet Quantum Scanner. Okay. But you're going to learn how to do all that once you become a company of our a customer of our educational platform here. Okay. So anyway, this tells me that I can go for a 1 to 2.5 on this trade. So what I do is when I go into my broker, okay, when I go into my broker here, I'll set this up. I'll set my take profit up here. See, let me just show you. I'll set my take profit up there at 1 to 2.5, right? So my take profit's set, but I'll drag this back down to 1.5 because this is where I move my stop loss to break even. So if price comes up above this area at any point, a wick, a body, whatever, then I move my stop loss to break even and I let it run. Okay, so that means I can't lose anything. I either get out of break even or I get my 2.5. Now, depending on market conditions, it could be up close here to 2.5, and I may just manually exit it, but I try not to do that. I try to just let it run. So anyway, that's a little bit about that. But the main thing in this video I want you to take away is that you have to trade with the trend. So let me show you. Now, here's something else I want to point out. So right here, I showed you, right? This is the 4 hour time frame. And I showed you that right here, this was the original, when we were bearish, this was the area where if we get a break of structure, we would turn to bullish, okay? This candle closes above there. Like I said, most educators and traders consider that a break of structure. They would now be bullish on EURUSD. We don't consider that a break of structure yet, okay? But here's what you have to keep in mind. So that means I'm not going to start looking for long positions just yet. But also, since the dollar index is dropping, I'm probably not going to look for any shorts either. So I'm probably just going to let this pair rest for a day, right? Until I see what actually happens here. Okay. Now you could see here, it stays bearish in our minds for another, 16 hours before we actually get, actually more than 16 hours before we actually get the confirmation that it is now bullish. Okay. So again, keep in mind, we still like to take every activation if the pair that we activate on is going with the trend that the trade is going with, right? But again, if you're going against what the dollar index fund is telling you, what can you do? You can reduce your risk in half, and you can set your take profit lower than you normally do. Okay. Or you could just not trade that pair at all. Make it easy, not trade that pair at all. Okay. I like to get in trades. There's something wrong with me, right? So again, remember, mindset is 80% of trading. The other 20% are the strategies, learning what to do. But I like to take the trades. So again, I'll reduce my risk. I'll set my take profit lower than I normally would. But I didn't do that the last two gold trades because I would have made some money on them had I done that. I was lucky enough though to get out of break even because they did make enough of a move. Gold did make enough of a move down, even though the dollar index was moving down as well, to get me to that break even point. So that is it for this video, guys. I wanted to stress the importance of trading with the trend, and I wanted to make sure you understood that with Trend Trap, we look at break of structure and market structure and break of structure totally different. Okay. We don't go by just any one candle. Okay. We look at it differently, and that's what makes our strategy so good. And that's why we have more success on our trades, because we're doing everything we can to ensure that we are taking trades with the trend. That's why, again, like I said, the first word in the name is trend trap. Okay. Once we've identified that trend, we identify the 1 hour support and resistance zone, and that's where we trap them. Then once we have them trapped, we execute a trade after we get a activation on our chart, a break of the trend line, and then a second confirmation with the GFU quantum scan, right? And I showed you the scanner before. This is the scanner right here. This is right now gold. This is the trend line. Okay, when price is above the trend line will be blue. When price is below the trend line will be red. All we're looking for on this scanner is when we go to take the trade, if it's a sell, we want to make sure that there was a candle close below this line. It's a little bit more than just a candle close, but that's all I can tell you. A candle below the line, right? And if we come to the chart and it's already below the line, then good, we're activated. We could take the trade. But if we come to the chart and it's still above the line, then we have to wait for that candle to go below the line to activate the trade. Understand? Simple. And that's all we use this scanner for. And that's it. We don't use it to identify any trades. We don't set any alerts on it, anything like that. This is purely price action trading. Price action trading. There's no moving averages. There's no indicators. There's nothing. Okay. So we just mark the daily range. We identify the trend. We set the zones. We trap price in the zone. And then we activate, take the trades, confirm with the scanner, and we're good to go. 5-step process. 5-step process. So does price sometimes blow right through these zones that we highlight? Sure. We have a 5-step process. We don't just take the trade because it hits the zone like some traders do. No, we have a 5-step process to get you to the zone. And then after it hits the zone, we still have 2 more steps, 3 steps to get you to the zone, 2 more steps before you can take the trade. So it's a 5-step process, and all 5 steps need to be completed. So again, guys, if you like this video, please subscribe so you get more of my videos. I'm going to be making these videos probably, for the next month or so, probably like at least 3 or 4 times a week. I mean, I think I made 2 or 3 videos yesterday alone. I don't know, but I'm going to get this video. I'm going to put it up here now. If you want to know, if you go to my channel here, like I was telling you, this video I just posted today, this is from last night. I made this video last night. This kind of shows you what I do to get ready for the Asian session. So I kind of went through all my charts showing you what I get ready for the Asian session. And I'm trying to tell you here, it's 5 steps, and most traders blow step 2, right? That's why the image says here, step kills, step kills. Let's see what it looks like here. Right, step 2 kills it, right? So if you don't get step 2 right, everything else ends up being wrong. So again, if you want the link to join our educational platform, let me know. I'll send it out to you again. 7-day money back guarantee. You'll be able to try everything out for 7 days. If you're not happy, you just ask for your money back. Have a great day. And we will be trading the Asian session here in about, what, 4 or 5 hours, 5 hours. Have a great day, guys.